Welcome back to Alpha Recap, your daily market rundown from stockalpha.ai. We're fresh off the close and ready to unpack the tape. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. The trading day just wrapped, and what really stands out here is the rotation more than a single leadership story.
So, quick snapshot to start. The S&P 500 finished the day up about 0.2%. The tech-heavy Nasdaq finished down about 0.1%, and small caps were essentially flat.
Right, that little tug of war. Modest net gains overall, but money shifting around underneath the surface was the real headline.
Yeah, absolutely. The day felt like selective buying. AppLovin and Robinhood both put up strong earnings prints, which created these little pockets of strength.
Yeah, that tracks. And institutional flows into crypto-linked products also stood out, which helped crypto-adjacent stocks hold up.
But that Nasdaq dip signaled some profit-taking in the biggest growth names. So it wasn't a broad risk-on rally by any stretch.
Totally. I mean, when you step back and look at this, it felt like investors were hunting for yield and stability as much as growth.
Let's walk through the drivers behind the tape. Why we saw this rotation today.
First, sector rotation. With megacap tech pausing, capital flowed into utilities, materials, and real estate leasing names. Investors were reaching for income and steady cash flow.
Second, idiosyncratic earnings. AppLovin beat expectations and rallied. Robinhood surprised on engagement and revenue diversification, and that pushed peers higher.
Third, continued institutional crypto demand. Coinbase and crypto-related ETFs saw flows, and that bumped up crypto-linked equities. Investors are increasingly treating those names like fintech platforms, not just pure crypto plays.
And fourth, macro and Fed interpretation. There were no shock macro prints, so the market basically priced in a Fed that stayed steady, higher for longer compared with earlier hopes of quick cuts.
Which is a simpler way of saying bond yields aren't falling a lot, and that keeps a lid on those long-duration growth multiples.
Exactly. So, short version. Rotation, stock-by-stock catalysts, and steady rate expectations. Okay, quick sector tour. Utilities were winners today. Investors favored the income and defensive characteristics.
Materials also moved higher, helped by copper and clean tech commodity momentum. Miners and specialty chemicals saw selective buying.
Real estate leasing names and REITs picked up interest too, as yield spreads looked attractive versus treasuries.
Energy was mixed. Some names tied to commodities and decarbonization got bought, but it wasn't a uniform rally.
Communications and media were patchy. A few winners on filings and specific updates, but pressure from tech weakness kept the group muted.
Financials and banking were more rotational than directional. Their moves were tracking credit condition expectations and Fed path talk, not any new fundamental shock.
Healthcare was in focus for innovation and policy chatter, but performance was driven by company news rather than a sector-wide bid.
Short reaction.
Not surprising.
Big move.
Let's dig into some notable corporate stories. AppLovin beat consensus and rallied intraday. A reminder that ad tech and app monetization still have upside if ad demand surprises.
Robinhood posted a strong print, and management talked up engagement and revenue diversification. That's the classic split between volume-sensitive names and those building recurring revenue.
Coinbase drew good attention because institutional flows kept coming. Investors are increasingly seeing the company as a broader fintech play.
Oracle got some analyst love around cloud transitions and enterprise modernization. Not a market mover by itself, but it fed a constructive tone for enterprise software.
And on the consumer front, Coca-Cola Euro-Pacific reported fiscal revenue up about 3% for the year, a steady demand signal that comforted staples investors.
We also saw a batch of 8K filings that created pockets of volatility for specific names. Mostly administrative, but traders react fast when anything material pops up.
So, what really stands out here is how much today was about stock specifics rather than a unified market move.
Yeah, and that's an important point for both traders and investors. The market was choppy, but not chaotic.
Let's explain a couple of the more complex ideas in plain terms. When we say long-duration assets, we mean stocks whose price today depends a lot on profits way out in the future. Think fast-growing tech. Those stocks get hurt when interest rates stay higher because future profits are worth less in present terms.
And sector rotation is just investors moving money from one part of the market to another. Not selling everything, but rebalancing toward utilities or materials if they want steady income or a play on commodities.
Right. And the other thing is that institutional crypto flows are not just retail hype anymore. Big money moving into crypto products can lift related equities even if the broader market is sideways.
Honestly, I was a bit surprised by how much that helped crypto-adjacent names today.
Me too. Okay, technical picture in a sentence. S&P stayed in the recent range, not breaking out or breaking down, and Nasdaq's small pullback showed profit-taking among megacaps.
Historically, those kinds of rotation phases have lasted a few weeks, with cyclicals outperforming until a macro catalyst shifts money back into growth.
So what should traders and investors watch next? First, the macro calendar. Inflation prints, retail sales, and employment numbers will move markets if they surprise.
Second, comments from Fed officials. Tone matters. Nuance matters. A change in their language could flip leadership fast.
Third, earnings follow-through. We had some good prints today, but the next group of reports will tell whether strength is idiosyncratic or broader.
Fourth, institutional crypto flows. If they keep coming, crypto-linked stocks could stay a distinct theme even in a range-bound market.
And finally, commodities and industrial demand. If copper and clean tech materials keep moving, that supports materials and certain industrial names.
For traders, use tighter risk controls. Look for event-driven setups. For investors, consider incremental rebalancing across cyclicals, defensive yield, and selective tech.
Bottom line, today was a microcosm of a market in transition. Modest S&P gains, a small Nasdaq pause, and basically flat small caps. Rotation, company catalysts, and crypto flows set the tone.
Takeaway: until a clear macro catalyst shows up, expect headline by headline and stock by stock tape rather than a conviction-driven broad rally.
If you enjoyed this recap or if something we said today piqued your curiosity, head over to stockalpha.ai. And remember, you can ask us questions directly through the Q&A feature.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with another Alpha Recap. See you then!